first half was a tale of two halves, wherein the Q1 had seen a fair degree of possible pre-buying, which led to likely a subdued performance in quarter two on the revenue front. On the operational metrics, things look okay. Let's get him into Ashwath Ram to talk about how he sees the rest of the year, arguably how he sees business in what is looking like a very uncertain global environment. Mr. Ram, great having you. Thanks so much for taking the time out. And do tell us whether this quarter two came up in line with what you had predicted at the end of the quarter one in our interviews and the call, and how do you expect the second half to shape up?
Actually, it came up pretty much in line with what we were expecting. We did have some amount of larger genset orders which got pushed out to the next quarter. But other than that, everything was pretty much as we had predicted. As you rightly stated, the first quarter was the pre-buy quarter. And it was a record quarter because we sold a couple of additional quarters worth of material in that quarter. And so subsequently Q2 from a shipment perspective in the domestic market sub 750 kVA has been pretty subdued, but inventories have been burning out at a very, very steady state. So which tells me that the market continues to pull material at a good steady level, which then holds good that the second half of the year should be much better than the first half of the year.
Okay, yeah, but you believe that is on the revenue front, and would that happen despite the price hikes? Because on the call, I believe you said that the price hikes are seeing some bit of acceptance.
Yes. First of all, the transition is going to take longer than what was originally planned. Originally, the plan was that July is the official announcement of the transition, and by end of the year, January 1 was when the shipment of CPCB4 was to happen 100%. Now that is pushed out to July of 2024. But despite that, in many markets, such as especially the NCR region and all the big cities, we are starting uptick of CPCB 4 plus shipments despite the higher prices. So that's actually positive news, even though the mix is such that CPCB 2 product will continue to remain the majority of the mix even going forward.
I get the drift. Would you say, Mr. Ram, that clarity on the kind of acceptance of pricing for CPCB 4 will probably come in at some point of time in quarter three, or is it difficult to say?
Yeah, it's already, I'm seeing a positive trend. I did not think that there would be such quick acceptance of a CPCB 4 product, especially given that CPCB 2 product is also being sold simultaneously. So even with those variables, the acceptance has been pretty robust. And I think even corporations and companies who are looking out into the future, they are, what I'm hearing from them is that why would I invest in a technology which is going to be obsolete when the path for the future is pretty clear? So why get into having a product and then having to retrofit it and upgrade it and do all of those kinds of things? So if I'm making a capital investment, I might as well make it with the right technology which will last me for at least the next 5 years without having to make new additions to it. So that's the thinking which I'm seeing from people, which I think is pretty positive from our perspective.
Okay. Have you sounded out a cautious tone on the exports markets? And I would understand if you have, because the the global markets are looking a bit skittish on demand.
That's correct, Neeraj. And the reason for that is we've seen for the last 3 years that demand has been rising, and we saw in the previous quarter itself we could sense that markets are beginning to flatten out. To add to that, all the turmoil with oil prices, with the Israeli conflict, just the variables are increasing of negativity. And even the China markets, which were supposed to revive, have actually not revived. They have slowed down. So generally, there is little bit of pessimism around the world on the growth rates. And we are starting to see that especially in Europe and North America, where demand for power gen products has dropped pretty significantly. Some of the other markets are holding out, but we want to be conservative with our approach on this. So we think that demand will be slowing down a little bit. We are trying to counter that by doing other things like launching more products, trying to get more cost efficient, trying to gain market share. I think all of those things will yield traction. But from an overall market perspective, the global markets are looking to be soft for at least a couple of quarters.
Okay. And gauging from my conversations with some of the companies in the investment exposed sectors, everybody's talking about how larger capex plans, say for a few industries, or the investment cycle kicks in maybe post elections and not before that in a meaningful way. Is it safe to assume that for the next 1 or 2 quarters, demand issues might persist, both global and local?
I can talk more about local demand, because global I already spoke about. We think there is going to be a little bit of softening, but we still didn't see a big dip in this quarter because we had a lot of backlogs, and so we were fulfilling all the backlogs. So if you look at our overall drop in exports, it's small compared to what the other parts of the market have actually dropped. But if you look at the domestic market has actually grown pretty robustly. And we think that most of it is not because of private capex, but it is because of government capex and spending on infrastructure. And then if you take that same line, we think that, let's take roads, for example. The government has committed to build 12,000 kilometers of roads. So far, they have built 4,000 kilometers of roads. So even if they continue the deployment of what has already been committed, I think the demand will continue to sustain. And then post-elections, once there is clarity on who will lead with what majority and how future spending, and if the same trajectory is going to hold, at least it's our view that India domestic demand will continue to be robust for the next couple of years.
Okay. The other aspect is margins, and there is this note that I'm reading from one of the brokerages which says that 30 to 50% price hikes are needed to offset costs on the new engines, and there is a margin concern therefore for them when it comes to Cummins. Could you comment on that?
Yeah, so I think we have indicated during CPCB2 times that the transition to CPCB4 will be expensive, because you're going from a complete mechanical platform to a full scope electronic platform, and you're adding after treatment, which is an entire whole subsystem into it. And that's how you go from an emissions regime which is the toughest in the world. Now, we think the material cost increase over there is anywhere from 20 to 50% depending on the nodes we are talking about, and subsequently we are going to have to realize that in pricing. But that kind of increase happens in every market during every one of these kinds of energy transition or emission transition cycles, and usually there's a blip and then the market adjusts to it and things just move on. So we don't look at it as a concern from an overall margin perspective. We actually look at it positively in that you're using better technology, better features, better value add from a customer perspective in the long term. So we should actually be able to consolidate and improve our margin position, because the earlier CPCB2 regime was a pure mechanical regime, and so it was getting commoditized. Anybody who had surplus engines, mechanical engines from tractors or from other applications could just dump the same product into the power gen industry, and that would work. But that cannot be done now. You have to get a quality and technology into the system, which actually means that only serious players who are investing in technology are able to compete well in this market.
So are you saying that your margins may take a near-term dip, but because you've made those investments which will hold you in good stead and ward of competition, you have the capacity of, let's say, pulling up operational metrics a year out once this is accepted across the market?
That's correct. And we are trying to do everything under our control and power to make sure that we don't even see the dip. Because what we are trying to do is we are trying to improve our operational efficiency. We are trying to improve our material efficiency. So even that transition, we don't see a dip in margins because we have our own stated objective that we will continue to grow the business at roughly 2x of the GDP, and we will continue to improve our profit percentage by 100 basis point year on year. So those are our own internal aspirations. So if we are to realize those, we have to keep improving our efficiency on multiple levels.
Okay, I have last 60 seconds. Just a quick two-part question. So I'll have maybe a bit of a rapid-fire answer. There is on what could turn positively. Two factors that people are citing: if power deficit levels remain at the levels which we are, and there is increased demand, and two, if there are higher exports to the parent from Cummins India. Quick comments on both of those, Mr. Ram.
Yeah, so power deficit problems are actually increasing, and as our country is getting more affluent, its consumption of power is increasing. The second part of it is nearly 30% of the new power, or 30% of our grid power, is now renewable. And what has been seen in other markets around the world is as that percentage increases higher and higher, the requirement for backup solutions and power actually goes up almost exponentially. So we are pretty confident that the demand from the India market for power generation will continue to remain robust for at least the next decade.
Okay.
As far as global markets are concerned, we continue to work with the parents to try to sell more products into multiple markets around the world. We continue to focus on our cost efficiency, on better product, on better delivery, on better quality, and with all of those variables, once we have them under control, certainly we win the right to export more all around the world. And that has been the history, and that will continue to be the case for us in the future as well.
Well, we wish you all the best for that and more, Mr. Ram, and to you and your team at Cummins and your family, from all of us at BQ Prime, a very, very happy Diwali and a prosperous New Year.
Same to you, your family, and to all our viewers. Thank you.
Thank you so much for joining in. And viewers, thanks for tuning into this earnings conversation.